So, what's the most valuable asset you have to your business? You might be thinking about your real estate, your intellectual property, maybe your processes for how you serve your customers, or it might be, if you really think deeply, key employees that you have that really help drive and hold together the entire enterprise. Employees can be some of the most critical components when we look at how leverageable, how at risk a business is, because those employees can be the ones that have all the know-how, the processes, and the personality traits to keep the whole business moving forward. So from a protection or indemnity standpoint, if that employee were to leave the picture, get hurt, or God forbid, be killed and removed, it can be very, very detrimental to most businesses. Well, like most assets, that key employee can be insured against the risk of them no longer being there or no longer being able to serve your business. These insurance policies that you can take out use whole life insurance, and they're called key person insurance or key man insurance. And the idea behind it is we as a business owner can be the policy owner, and we can take out a policy on the employee that we'd like, or the key employee that is the insured person. They would have to go through underwriting. They would be the person that would be asked about the medical components and the death benefit. All the sort of components of how the life insurance would be structured would be based off of that person's life. The real strong suit here is that from a business standpoint, we are able to protect ourselves in case something happens to that employee. And we get all the benefits to make the policy do whatever we would like and use the policy and the death benefit and everything else just in the ways that benefit our best interest, the company's best interest, because we have what's called an insurable interest. In other words, if that person were to pass away, there would be a huge financial loss that would be incurred by us as the business owners. So you'll see in a lot of organizations, they take out key person insurance on their top executives, on people that are in sales roles or accounting roles or specific sort of linchpin positions within their organization that they want to try and protect. So the way that it works is you as the business owner would take a policy out. You would be the policy owner, and you would make yourself or your company the beneficiary, and the insured would be that person, that particular employee. The nice part about this, in addition to just the protection layer, is you have a nice, safe asset that you are growing cash in. So like we talked about in other videos, you're going to fund this policy with after-tax dollars. So you're going to pay in a premium each month or each year to create and sustain this policy, which buys you the death benefit. Should that employee pass away, you would get to capture that death benefit. That would be something paid out to you from the insurance company. In the interim, so if this person works for you for 30 years and they don't pass away, it's a nice, safe place to get guaranteed growth on your money, to have the protection layer in place that we can leverage and use. And again, look at some of our other content to understand how the cash value component is there. But basically, you're going to contribute and pay for this policy. The money in there, like rollover that's not being used, is just going to keep growing. It's going to get guaranteed growth. Our accounts go from anywhere from 4 to 6% that they're compounding on themselves inside these policies. It's also leverageable. You can take policy loans out and use the money for anything that you want. It doesn't have to be specifically for that employee. It doesn't have to be for the business use. You get full and free range on what and how you would like to use the cash value that you're accumulating inside this policy with the payments that you're making. So it gives you living benefits the entire time. It's like another safety savings account that you get to store cash in. You get this over umbrella policy in case something happens to that employee. If they were to pass away, you're going to get a large lump sum payout to you in the form of a death benefit from the insurance company to cover your expenses, to cover training, to cover anything that might happen or you might need to do to fill the void where that employee was. And the last sort of benefit that you can do is if all things go according to plan and the employee is healthy and stays with your business for a long time, what a lot of employers will do is you can actually transfer and surrender components of the policy or the entire policy to the insured, which would be the employee. So what a lot of people will do is say, hey, you're a key employee for us. We're going to take out a policy for you. We're going to pay into this thing for 25 years. If you stay with us for the entire 25 years and you don't leave for any reason, we will actually give you sort of like a pension off of this, and we'll give you retirement income from this policy if you stay with us. So you as a business owner are contributing to the cash value, you're feeding the policy, paying for the death benefit, and accumulating cash that's guaranteed inside the policy. And then what a lot of people will do is they'll say, okay, well, now that they've hit the 25-year mark, they've reached 65 years old or whatever, and now they want to give them an incentive to stay around, but also reward them for a long career with us. They will take out something like a policy loan, or they'll even withdraw cash from their policy and pay the employee. And that might be for 15, 20, 30 years, however much money you have in there, however you want to structure it. It's very flexible in that sense. So just to kind of round out that, we've got the overall umbrella protection in case that employee were to get disabled or killed. We have the ability to actually have a financial safety net in case that happens and they're removed from the picture. We also have a great place to store money in the interim while they're working for us. It's another cash asset that we have on our balance sheets that we can access at any time, that's growing tax-free as well as compounding. And then lastly, it's a great incentive or retention strategy, because we know that one of the hardest things to do is to keep employees with our organization for a long period of time. So you can incentivize employees to stick with you by saying, hey, I'm going to be taking this policy out on you. If you leave, you're not going to get anything. But if you stay for the 25 years or 10 years or whatever the amount of time is that you negotiate, you can actually have a nice benefit package for that employee, whether it's a one-time cash payment, maybe it's a withdrawal, maybe it's a bonus, or it's like a pension where you pay them out like an annuity almost, where they get payments every single month or year. However you want to structure that, you've got a lot of flexibility built in there.